Congratulations, you've received multiple offers. Now what? Hi, I'm Jenny Hendricks at Century 21 Prestige Realty. So, you're evaluating multiple offers. That's a pretty good spot to be in. Congratulations. Let's talk through this. Let's start by defining your goals. Is getting the most money on your sale the most important thing for you? Is flexibility in your timeline more critical? Or is it more important to sell quickly? Defining these priorities will really help us evaluate which offer is going to be the best fit. Okay, once we've determined what your goals and your priorities are, the next thing I like to do is to categorize these offers into kind of three parts, okay? The first one is speed, the second is certainty, and the third, of course, is price. Let's talk about speed first. Really revolving around the closing date. How fast do these buyers want to move? How does this align with your timeline? If you need to move immediately, then maybe a sooner closing is going to be a better offer for you. If you're maybe waiting to close on a new home, you haven't found one yet, there's several different scenarios there. Maybe more flexibility in that closing date is going to offer you a better fit for accomplishing what your goals are. So that's something to think about, is how do these offers stack up according to what you need to accomplish with your timeline? Okay, once we've determined how those offers match up with your timeline, let's move on to the certainty of the offer. So first, do you have all cash offers on the table? Most of the time, having a cash offer means that it's possibly less risky, which is obviously appealing. The primary benefit to an all cash offer is you usually don't have to worry about an appraisal. Sometimes if those appraisals come in low, it can throw a stick in the spokes of a transaction. So usually an all cash offer avoids that scenario. But even with an all cash offer, it does create a higher degree of certainty. Sometimes the trade-off is a lower price. Not always, but sometimes. So that's something else you kind of need to look at and weigh out. Next, let's look at how financially stable the buyers appear to be. Our goal, of course, is a smooth escrow all the way to closing, and that is improved with a more financially stable buyer. There's a few factors that we look at to help determine this. First of all, how much are they putting down for their down payment? How much is their earnest money? And if they're getting a loan, how strong is that pre-approval? If they're getting a loan, of course, you should always have a pre-approval letter submitted with the offer. Okay, let's first talk about down payment. A higher down payment could be indicative of a serious and more financially secure buyer. However, in our local market here, there are a couple of loan programs that are zero down. One of those is a VA loan. And in my opinion, VA loans should not be discounted just because of the lack of a down payment. These loans are earned, of course, through military service. And my personal feeling is they need to be evaluated with that basis sort of in mind too. So it may not have as much indicator of financial stability or instability with the VA loan because they've earned that through military service. Okay, here locally, there's also a loan product called the USDA loan, which is also a 0% down loan product. And it's specific to rural areas like ours. So not all areas have access to this loan product. And FHA loans, of course, only require 3.5% down, and they're really used quite frequently in our area. So in my opinion, all of these loans have kind of pros and cons and should be weighted on par with the amount of down payment. I really want to make the point that it is my firm opinion that a strong local lender is at least as important as the type of loan. I have seen deals fall apart where the lender was from out of town. They're not familiar with the area. They're not familiar with some of the unique things that we deal with here. So that is something really to evaluate, not just if there's a pre-approval letter, but who is that pre-approval letter from? Does that lender have a strong track record of closing the types of loans that the buyer is trying to get for your particular type of property? Kind of a lot to unpack there, but it's really important to understand how the loan, the down payment, the type of loan product all kind of work together to make a stronger borrower. Okay. Earnest money deposit. Earnest money is a signal of good faith from the buyers, and they will not get this money back if they back out of the deal for anything other than a contingency that's already been agreed to in the contract. And then, of course, we talked about pre-approval. These days, being pre-approved for a loan is pretty much a requirement. I don't know many people, many agents who will even show homes without a pre-approval letter. The market is just moving so quickly. So even though the pre-approval doesn't guarantee the buyer's financing, in the competitive market that we're in, you just got to make sure that you've, first of all, got a really strong pre-approval letter. And again, I'm going to emphasize, from a really good lender who's got a track record of being able to close those loans. Okay, moving on, let's talk about contingencies. Are there any contingencies in any of the offers that you are evaluating? So when a buyer submits an offer, they're with contingencies. They're stipulating additional requirements that must be met before the sale can be finalized. All contingencies in an offer, of course, should be evaluated, and how they might impact the sale really explored so that you understand exactly how that's going to affect your timeline, the certainty, and of course the borrower's strength. So pretty standard contingencies that we see most of the time are financing, appraisal, and inspection or due diligence contingencies. Occasionally we do see a contingency for a buyer to sell their home before they can purchase yours, something to think about. It adds another layer of complexity to the deal. It's something that we're seeing more frequently right now as the market is just heating up and it's moving so quickly. And as a seller, you might find yourself in that position too on the other side, where you're making an offer on the home you wish to purchase, but you've got to sell the home that you're in too. So it's not uncommon right now in the market that we're in, but it is, again, it's another layer of complexity. It's another contingency in that offer. So make sure you completely explore that and really understand the buyer's position and how that's going to impact your sale and how you're going to have the ability to move forward and accomplish your goals. Last, the best, let's talk about price. How much is the buyer offering? Although price is pretty self-explanatory, there are a few additional factors we take into account because it can end up affecting your net. So the highest offer in price isn't necessarily going to be the one that nets you the most. So this is kind of a critical piece of evaluating those offers in front of you. So let's talk about price a little bit. First of all, is the buyer asking you to pay for some of their closing costs? Sometimes a buyer will ask a seller to pay up to a certain percentage or a certain dollar amount of their closing costs. Or is the buyer offering to pay some of your closing costs to make their offer a little bit stronger? Sellers can sometimes negotiate some of those closing costs and fees, such as escrow fees, title insurance, home warranty fees, HOA transfer fees, recording fees. Here in our area, sometimes there's water involved in the purchase, and that has sort of another layer to it and another opportunity for negotiation there as well. So take a look at what the buyer's closing costs are, the seller's closing costs, and who's being asked to pay what. Typically, the standard language in the contract says that everybody is going to pay their own closing costs, and it'll also delineate who's paying the HOA transfer fees, who's paying for the home warranty, and so forth. Those are all points that can be negotiated. So take a look at all of that and get a seller's net sheet prepared. So it'll have the price, it'll have all of your costs, it'll have any costs that the buyer's asking you to pay on their behalf. And you can kind of compare and contrast if you've got offers where the buyer is saying, no, I'm going to pay all of my own costs and I'm going to offer to pay some of your costs as well. So again, the highest price doesn't necessarily get you the highest net. So another analysis really needs to take place with that price. All right. I hope you have success in negotiating these offers. I hope that was helpful. If you like this video, please click here for more great videos and more information. I'm Jenny Hendricks, and we'll see you soon.